Whenever we look at the pi cycle top indicator for Bitcoin, whenever we see the crossover of these two pi cycle moving averages, we tend to see a bull market peak occur. As you can see, the bull market peak is nowhere close because these two moving averages are diverging from one another. For this Bitcoin pi cycle top indicator update, stay tuned, subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's talk about it in more detail. So this is the pi cycle moving average. We see that these two moving averages are diverging. But before we talk about the crossover in of itself, let's talk about the role that the 111-day moving average, the orange one, plays in terms of bargain buying opportunities. Of course, in bear trends, or at least pre-halving years, we tend to see oscillating around this moving average. But in halving years, for example 2020, this orange moving average tends to act as a support, facilitating the uptrend to new all-time highs. And after the bull market ends, you can see that in a bear market, we see that this moving average actually acts as a resistance and rejects price until we're once again ready in the pre-halving year to reclaim this region, maybe oscillate it around it. But in the halving year, actually, you can see that we rebound from here, and anything below the pi cycle moving average, dipping below this pi cycle MA, this is bargain buying territory. And you can see that from 2016 to 2017 that we can hold here for a nice long time, dipping below it very briefly all the way to new all-time highs. So any dip below the bargain buying MA here, that simply is an opportunity we can't afford to waste. In bear markets, very different predicament because we oscillate in and around this moving average, but all the way to new lows essentially. But in halving years, the principle is in halving years and beyond, we tend to hold this region as support, and any bargain buying should be occurring once we see brief deviations to the downside below this MA, which brings us to this point. We are currently below this 111-day moving average, and we haven't been below it for a substantial period of time like we're seeing right now since back here in the pre-halving year, in this consolidation period. And before then, we were actually below the pi cycle moving average in the bear market region. So it just illustrates and highlights the level of opportunity that we are on the cusp of enjoying right now. This is a downside deviation below the pi cycle moving average, and we're not going to be here for too long a time. And once we reclaim this moving average as a new support, we'll be able to rally higher towards the upside. So this is definitely that bargain buying opportunity, and we need to reclaim $63,900 as support to end this bargain buying opportunity. So we're currently around 59K right now. So we are approximately $5,000 away from that reclaim. Not much needs to happen for Bitcoin to bounce and reclaim this region to end this bargain buying opportunity. But we also have to talk about this green moving average, because this green moving average tends to get revisited at later moments in the cycle. As you can see in the halving years and beyond, we tend to see resistance at this green moving average before upside deviating. So when we think about downside deviations below the orange moving average, those are bargain buying opportunities, and upside deviations beyond the green moving average, that's when we see parabolic price action take place. As you can see here as well in 2017 and also 2013 as well. Talking about the first half of 2013 and then the second half of it. So that just gives us an opportunity to understand price, that downside deviations below the orange moving average, bargain buying opportunities, upside deviations, that's parabolic upside, and increasing financial risk as we search for new all-time highs. Well, of course, nowhere close to this green moving average because it resides at around 96K. So we're still almost 30K away from this region, but we probably, based on history, we'll probably get there over time and then perform that upside deviation, in which case we'll need to understand that that upside deviation will enable the parabolic upside, but that's going to be quite limited in terms of time. We don't tend to spend a lot of time beyond this green moving average. So once we break beyond there, once we break beyond 96K, we have to understand that the clock is starting to then start ticking really for the end of the bull run, and we might have a window of just a few months where Bitcoin will be rallying uninterruptedly with, of course, pullbacks on the way to new all-time highs and beyond. However, it will end at some point. We will top out in the bull market peak, but of course we're not yet there. We're still far away from 96k, and we're still, probably most importantly, fundamentally away from the bearish crossover that we tend to see in a pi cycle indicator. Whenever we see a crossover, that's the bull market peak over within a few days. Every time we see a crossover, that's a really reliable indicator. And in 2021, that was one of the few indicators that really gave us a clear signal of this being the end of the bull market. We were aligning these two moving averages. There was a convergence here for a long time before we actually got that crossover. Whereas right now, we can't really talk about a bull market peak simply because these moving averages are actually diverging from one another. First of all, they have to start converging. So it's probably going to be this orange moving average, the one that's more sensitive to price action because it takes into account the 111 days of the past. So it takes into account less data, and that's why it's more sensitive. So it has to start flicking up. And once it flicks up, then a crossover will be more likely in the future. But we don't even have this convergence that just yet. We're having divergence, which only pushes down a potential crossover further and further down the road. And if we were to simply extrapolate and push these moving averages into the future, then we'll simply see that there is no crossover that's even remotely possible because of this divergence. So we'll be able to assess when a potential crossover will happen in the future once we start to see convergence in the moving averages. And for that to happen, we need to see price return back above 60k, maybe return back above 63k, which is where the pi cycle moving average currently resides. That's exactly what we need to see for this convergence to start beginning. We need to see a flick up in the pi cycle moving average for that crossover to be in place to some degree. But even then, if this flick up isn't going to be very sharp because price won't rally that hard, then really important to understand that an extrapolation of this moving average into the future, that might not produce a crossover in of itself. We need to see a sharp reaction in price action for a crossover to be on the cards finally. So we're very far away from a crossover at this time, which means that we're still in bargain buying territory. And once this bargain buying territory is over, then we'll be able to start seeing price rally towards the upside, and then that's going to pull this moving average to the upside with it. We're going to start seeing flicking up, and then we'll have a understanding and a framework as to when a potential bull market crossover, or at least a bearish crossover, will occur to mark the end of a bull market. And of course, we are still in the halving year, so still lots to enjoy in terms of this moving average and just price action, this moving average going to the upside, and also price action going to the upside. After the halving, we tend to see a period of upside that lasts the amount of this square right over here. So after 2016 July, for example, we saw price rally for an extended period of time as well, maybe even longer than that square right over here. And the same thing in this halving. So the bull market peak is nowhere close to occurring according to this data science metric. If anything, we're still in that bargain buying territory, and it can't be ignored for too long. Yes, we are consolidating for 5.5 months, maybe even slowly 6 months, but this consolidation is normal after a halving event, as we saw over here, for example, after the 2020 halving, after also the 2016 halving, where you saw consolidation take place around here as well. So this consolidation is not out of the ordinary by any stretch of the imagination, but this consolidation will finally end at some point, and that's going to bring an end to this bargain buying opportunity. And once we rally towards the upside, it's going to start flicking this orange moving average to the upside and potentially giving us a framework for extrapolation on when that bearish crossover could occur for a bull market peak. But of course, we're nowhere close just yet because these moving averages are still diverging. We're still in the reaccumulation phase and on the bargain buying part of that reaccumulation phase. So really important to make the most of that opportunity. And that's about it for today's video. Thanks so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.